Welcome back to Small Caps. My name's Kerry Stevenson, and today I'm bringing you Scott Beeton. He's the CEO and Managing Director of TZ Limited. ASX code is TZL. They have smart solutions, and I'm telling you now, ladies and gentlemen, we all know COVID's been around. It hasn't gone away, but I guess it's people's behaviour has changed, and that's where TZ comes in because they've got some smart solutions. Hey, Scott, welcome to Small Caps. Good to see you.
Yeah, likewise, Kerry. Thanks for having me.
Now, for those that don't know who TZ are, just give us an elevator pitch as to who you are and what you're doing, especially given these contactless times, and what your smart solutions are.
Well, definitely. Well, TZ essentially, what we did, we reinvented the lock, and we call it a smart lock. With modern technology we have today, we have different access control, smart lock, and self-serve locker banks that's come on the back of that electronic lock and that smart lock that we produce. So it's all a bit fancy buzzwords there, but really underneath what we're able to do is we take our technology and we work with different companies, retail companies, click and collect, etc., and we create beautiful locker banks where people can use locker banks for you to take your package. So if you buy online and you don't want to wait at home, or you don't want to jump in a big line at Australia Post to get that, what we're able to do is you can choose to have that in a locker bank, and TZ produce them and we sell them to clients, and our major clients in this category are UPS and Single Post, that we're our existing clients that take that solution. Those countries are a lot more advanced than us in rolling out this technology and hardware. So that's a core of what our business does.
So do you create the actual smart box itself, or are you the software solution behind this place where people
Good question. So we're both, actually. So think a bit in the world is we create the hardware and the software, and we mix them together for the solution. But only recently, as our software platform has expanded, we've actually taken our software platform and it now actually works with other smart locks as well. So why our platform is important is that when you put the complexity behind different access controls, and I'll use a real basic example. Let's say you own your home, you put a smart lock at the front that you can go and buy down at Bunnings or JB Hi-Fi. It works, it's fit for purpose, great software behind that. You own the home and you want to have access, you want to give it to your children, your husband, your grandparents, whatever it is. So it's okay, then maybe you might give it to your cleaner. But what if you then want to move out of your home, rent it, put it on a property roll? Who has access, and the hierarchy on who can give you access in that door? Is it the tenant? Is it the landlord? Is it the property manager? So who can give access to that door? The minute you do that, you actually need a management software layer on top. So I'm not saying that some of these locks out there or these smart locks don't do that, but think of the complexity. Then if you put on top of that a postal worker that might be able to actually open your door and put a package behind your door, would you trust that to be, would you allow somebody to actually do that? So it's a lot of people are actually would traditionally say no, but then over time through technology, and if you can take a picture of that person, if it can notify you that the door's been opened, you can see them through a security camera, you know their picture's been taken, then then it will notify you back that your door's been open for 20 seconds. You might put trust back in the process. And with trust and audit control, you may let somebody access your front door that today, I'm with you. I think it's a long way to go to letting someone go into your front door. But why I'm using that as an example is that's the software layer that sits on top of these things. So, and that's where TZ excels in.
But TZ's been around for quite a while, Scott, and I didn't mention at the beginning, but you've only joined as the CEO and Managing Director in March last year, right at the start of COVID. Lucky you.
Yes, lucky me.
But TZ's been around for a while. Why did you join in March last year, and what is changing? What can you tell both existing investors and also those looking at TZ now as to what you're doing to change the business going forward?
Yeah, great question, because so when I left my previous job, and which was, I was the founder of Sequoia Financial Group. When I saw this opportunity, I really didn't think I'd go back to running a microcap, unloved company such as TZ. And particularly, it's a different industry than I came from. But then by knowing the chairman, he convinced me, slowly worked at me and said, look, these are the reasons why I need somebody like you. And that was basically saying we need an entrepreneurial person, somebody can do things, just go in there and make change and just do it the way that I saw you do it from Sequoia. So that was part of the method. But when I looked at TZ, you've got a global company, the best A-grade client list I've ever seen. So when I sit here and say we have the most advanced software platform for smart locks in the marketplace, you know, I meant to say it on the MD. But at the end of the day, look at our client list. And that's the biggest endorsement. When we have some of the world's largest banks that take our solutions, that need to make sure their security of their data, their staff, etc. When we have the largest software companies such as Apple, Microsoft, Cisco, Google, that all take our solutions, that is the endorsement of our business, of our solutions. So tell me what other microcap company you can find in Australia that has the client list we have. And I doubt you'll find it. There's obviously plenty of Australian companies that's as successful at selling software globally, but that's the endorsement of our software platform. The hardware gets mixed match between pretending what our clients want the solution. What business problem are we solving? Is it the access control for your front door? Is it the access control for your mailroom? Is it the access controls on, which is packaged? Is it day lockers for your stuff because you want to go an agile workplace? Or is it like we have in Apple where they need to lock down certain prototypes and they need to know with their security and their secrecy of the business that they don't want their prototypes for their next product to be leaked out there or left?
Well, we've got a freeze. Oh dear.
Have them inside Apple.
Sorry, Scott. Scott, we just had a little bit of a freeze there.
Oh, sorry.
Don't know what happened, but ladies and gentlemen, that's what happens when it's live. So there we go. You were just talking about Apple. So just go back to.
Yes. Well, basically, I was just saying that, you know, with them as the type of client they are, that they were able to take our software platform and our hardware platforms, and they're able to lock down prototypes. And so if they're not in the field testing them or someone's playing with them, you know, in their different centres, is what they do. They know who has it or where that prototype is at any time. And that's why different clients like Apple comes to us to create these different access controls. So it's so important they don't lose the prototype. So in that one, it's not hardware that they're looking for. They're looking for access controls, and that's true. But then on these access controls, there is our smart lock that sits there as well. But the main reason why we've been selected is because of the software platform behind it, that they can control it. It's got the security around it. They can control the different platform, who gets access. So in other words, what I'm saying is I can't log in as the managing director of TZ and I can't give my access to their next iPhone prototype or iPad or whatnot. The company controls that.
But what have you changed since you've come on board that it was in the past? You know, I don't want to harp on it too much, but
yep.
Have you had to refocus the company into less products?
100%.
Okay.
Yeah. So basically, what I would say this company lacked at its heart was an entrepreneurial spirit, a can-do spirit that can come in and really refocus the business, but focus what's more important. So at the end of the day, for investors, what TZ lacked was it overpromised, underdelivered pretty much its whole life as being a listed company. So I've come in and I saw the business. I had all these great things. This is your client list, all the things I'm saying to you. Simply, the debt level was too high and the cost of the business was too high. And starting on the day of lockdown, my first activity as the managing director of the company was to send everyone home. So my style was to get in there, meet your team, see what we do. First thing I had to do was send everyone home, and everyone worked from home for, as we know, and only just now we're getting back into the Sydney office. And so it was focused on costs. So we've been able to reduce out of our fixed costs approximately $2.5 million, which is about 25% of our fixed cost base. That included us. First of all, it was simple, some headcount reduction, going to many different people in the business, executive, cutting salaries, that type of thing, identifying where are the duplication. From there, I worked out that we had too many offices for such a small business. So one of the things was that we closed our Brisbane office down and we relocated and recruited for everyone to be under our Sydney head office. So that was a big cost reduction there. It resulted in a couple of headcount being made redundant as well. We did the same thing in the US. Then behind that, then we looked at it and we had too much duplication. So we had different finance teams, different systems were running, different inventory systems globally. It was pretty chaotic behind the scenes. So we introduced a new sales system that everyone's on the same sales system. One inventory system, globally we're on the one inventory system. Same thing with finance. That's allowed us to do those cost reductions we're talking about. So that's us having a pretty clean and efficient back wheel. Then what we're able to do, we need to focus on our balance sheet. So we recently closed out a capital raise. We raised just over 2.5 million. We're currently doing a rights issue to raise 7 million. And the end result is basically a company that's break even, virtually no debt. And we're hoping to have that down to zero debt over the next couple of months. And we've got a pathway to move forward and create that as a listed company to prove to shareholders our business is efficient. We're run by people who not only are entrepreneurial, but we know how to run a small business. And that's where my background is. Starting my own small business, you can't spend more than what's in your back pocket. Otherwise, you're not going to be around for long. And that's the culture that we've got here. I've recruited some new management, new executive management. I was talking about Simon Van Ness. Again, comes out of small business. He's very entrepreneurial. Same thing. It's that culture coming here that you've got to watch your costs. Because in a business like this, you can always get caught up in inventing something new or going down some sales opportunity that just doesn't turn to revenue. So that's really the focus of the business. Cut costs, build the infrastructure needed. Now it's balance sheet. And then on the back of that, we can grow revenue, but we can actually make sustainable revenue, which is the last thing I probably would like to say. Virtually a couple of years ago, the culture of the business, the way we sold, we try to get as much upfront sales as possible. So we didn't lock clients into long-term agreements, selling software as a service, a SaaS-based model. We didn't have any of that. And we've been able to grow that model now to being over 2.5 million of recurring everyday revenue. And that includes our, the different things such as software that we're renting through a SaaS-based model, hosting solutions, but long-term agreements. And that's where I'd really like to highlight that. And the larger your installed base, and particularly if the hardware is starting to age, you get replacement products and you get replacement sales. And then what I'd also like to say is that within our day locker solution, a lot of our clients are big, large companies such as Westpac. There's over 26,000 lockers in Westpac. They're trying to get their business ready or their premises ready for their staff to go back living with COVID. So they come to us and they say, well, we need to adapt your software because we need to change workflows and different requirements. That's extra software sales that we'll get. And so the larger your installed base, the more of this ongoing recurring revenue model comes out of it. And that's really a highlight and it really interests me in the TZ, and it's a full focus of growing those revenue streams. So we become a sustainable business model, one that's easier to predict our revenue. And as investors, you can look at it and you can see what are the key drivers of growth and what do you expect out of this business, which at the end of the day, we're all trying to achieve shareholder returns and growing the capital base of the business.
Well, actually, speaking of which, has COVID been, you started when COVID started, was COVID a positive or a negative for the business?
I'd definitely say I'd say it started off as a negative because we had, because we produce hardware, we have to do installs. Right. And when you can't get on campuses in the US, so you can't get into offices, it's very hard. And then you have a supply chain where you're buying goods from around the world. That really wasn't impacted that much, but it was getting on premise and being allowed. And one day they'd say, yes, you're allowed in. And the next day you turn up and be able to know we've changed the rules. And, we all know living here, rules came in and out very quickly. Things happened very fast. And so that's the same thing with our clients. So that's from a negative point of view. But the good thing is all those orders are still there. Right. So we didn't have them cancelled. So we've actually been deploying them. So you could say that, well, it's worked out okay. It's not that they were cancelled, but short term it hurt the cash flow of the business. But then now you look at it and you've got a change of buyers' behaviour. So, even though I'm not exactly too ancient, I traditionally don't buy online. My wife does, but if I want something, I go to the store. Well, in COVID, I had to buy. I don't mind going up to little shops. I hate going to the big Westfields, but I don't mind occasionally going to the shops and buying. But people like myself, my buyer behaviour changed on the back of COVID, and I was for the first time ever, I bought online, and I bought online a lot, and I still do. And so you put that in the world, and you think, how many people like me exist there? And you talk about some statistics out of America. It's everywhere. And so if I just highlight this a little bit, if you think countries like Singapore, a lot of the countries in Europe actually had invested heavily in hardware and new technology just as the model of buying online and click and collect was changing. Countries like Australia, we're stuck in yesterday's retail model where, you go to the store, you buy. How many retailers really, Coles, Woolworths, they do a good job, but they have a complete process from you buy online and they'll deliver themselves to your door. But other retailers don't have that infrastructure. They're worlds behind, as we know, right? So this whole arms race and COVID has changed that behaviour, having click and collect, different retail models, delivery models where you can either pick up in store, someone will, you're in the driveway of the shop or whatnot, and they'll bring it to your door, or you can buy online and it goes through a courier company to your front door. There were many kids over Christmas that didn't get their Christmas presents from Santa because companies like Australia Post and other courier companies just could not deal with the demand. Right?
Sorry to interrupt you, but people like the big companies like Amazon and Australia Post, haven't they got their own? Why would they need TZ? Don't they have all their own infrastructure?
Well, I'm hearing you. And that both of those aren't really our target market, to be honest. So
okay.
where you and like that's why I said Woolworths and Coles, they have their own infrastructure from start to finish. Lockers become part of it. But what if you don't have distribution centres, or Woolworths and Coles are almost on every corner, right, or every town? Is if you don't have that, how do you reach that marketplace? And that's where our solutions come in. So it's not really the Australia Post; it's the other courier companies that aren't as established. But it's the other companies. So I'll give you a case study of WestTrac. WestTrac won't know it's it's a Caterpillar license to sell in New South Wales. It's owned by Channel 7. And what it's able to do, it's its clients, big mining companies, whatnot, that have these huge construction companies that have huge equipment out in the field. Now, if a part goes down, that means that either big tractor or whatever it is no longer, it's downtime on the workplace.
Absolutely.
It costs them money. So yep. WestTrac came to TZ and said, we need a whole new solution from online, knowing where a part can be picked up, 24/7 access that's not just from pick up at the kiosk. And we did a complete solution all the way through from start to finish. Even though a lot of people see it's a locker bank at the end, or in hours the trade desk is open, you can go in, but it's the software behind that, from our software working with their inventory systems to where it can be picked up from, what location. You can go to the in-store and get it at the kiosk or in a locker bank, or you can even get delivered in certain locations. It's all driven by TZ. They're the type of clients that we go for, looking for that. I'd love to get Woolworths or Coles, don't get me wrong here, but they already have their complete solution. Right. Amazon does. And so when you look at it and you think, yes, Australia Post is good. They have all these Australia Post stores that they could dump items in and all the rest. Their office hours were still the same. The lines were still the same or longer. And I had the same thing from one of the items I bought online. Guess what? It for some reason I had a missed delivery. I don't know why. I missed the person at the front door. Then I had to go to, in the middle of summer, go into Australia Post. Parking wasn't that good. Long line out the door. And then I finally got my item. I can tell you I bought this from David Jones. I only wished I went down to David Jones' store and bought the glasses instead of buying online. It was that painful to get. And it wasn't cheaper. It was just, I did it for convenience. And that's the problem that a lot of these retailers have. It's not so much your big guys that have invested in a complete end-to-end solution.
Scott, tell me this. Are your main market Australia, the US, Europe? Where's your main market? And you mentioned before that you're not profitable just yet, but you've got rid of all your debt. Let's just talk a little bit about numbers.
So we're on track to get rid of the debt, yes.
On track to get rid of the debt. So let's just talk numbers and markets, if we could, from an investor point of view.
So our main market is the US, and this is where us as a technology company, we're able to adapt our core technology, which is locking device, access controls, whatever you want to call it, and we are able to push it into markets. So the US market, a large component there is universities. And that's where we're taking traditional mail centres. So if you imagine your Australia Post with a lot of little black boxes everywhere, they have them for each student that lives on campus in most of the universities in the US. So if you live on campus, you need somewhere to get your mail. That's traditionally the background. We replace them with the smart mailroom, which includes the hardware being the locker device. If anyone wants to see this, there's a really good video on our website. It's Fairfield University. It shows this. So what we're able to do...
What's your website, Scott?
www.tz.net.
tz.net. Go and check out the video on tz.net. Okay.
And that gives you the background.
Basically, what these universities are in the US, they're mini cities. They're massive. They've got loads and loads of students. Lots of property has to be put over to these mail rooms. But what you're saying is, instead of Johnny Smith having one that's just dedicated to him, it can be recycled. It's kind of like fractional reserve banking. You can loan it out multiple times, but only have a lot less space. And so you're
100%.
Clever use of hardware with the software behind it, which is allowing that to happen.
Yes, and it's so it's the mailroom software on the package, but it's also worked in with the couriers, but it also sends a notification to the students that you've got a package to pick up. And depending on the size of your package, depends on the size of the locker you get. So it's a really good solution. I mean, everyone can watch it online, but that is our main market, and that's a smart mailroom. And that's where you said the benefit or solving real business or world problems is it enhances the solution for the students, but it saves money and time for the university as well, meaning they have less hardware sitting there idle, like you're saying, but also the space.
Okay, we're running out of time. I've got to ask you, sir, a couple more questions. There are a lot of universities in the US. What's your penetration in the US at the moment? For
really low, less than 5%, about 2 to 3%.
Okay, so from an investor's point of view, you're looking at it and going, wow, okay, so there's still a lot of penetration that TZ have got to do in the US. And are you confident that you're going to grow from that 5%? And what sort of time frame are you looking at?
Yeah, look, well, I'd like to say there's an arms race in the back of COVID, changing whether business decisions, whatnot. The universities that didn't have these solutions were more impacted with their mailroom and their students living on campus, contactless delivery, etc., than the universities that had the smart mailroom system. So you're getting a lot of budget allocated to this. So that's great. That's a huge addressable market. We are seen as the market leader, and I won't say the name, but our major competitor in the US just did a major install at a big university. Within 3 months, it was chucked out and they were told to come and get them. You did not deliver what you promised, and a TZ solution was replaced.
Wow.
So that's, again, I can say as many different things I can, but that's an endorsement of our solution, and we're seen as the premium in that marketplace.
All right, Scott, I need to, what I'd like to know is, why should investors be looking at TZ right now? Okay,
so basically, when I'm as an investor myself, is that you've had our share price has been an impact of a lot of overselling, and that's because of the poor performance of the business up to date. So what I've tried to identify since coming here, having a sustainable business model, one with the right people running it, that have the energy level, but more importantly, know how to grow a business and have a track record of that. Therefore, you can buy into our company today, and I believe there's plenty of upside, and that's not just because of me, but look at the underlying technology, the product, the depth of management in the business, the focus, but then look at the client base and getting this recurring revenue model off the back of that. That's what investors want to see, and that's what we want out of TZ.
Well, it sounds like that you've only just getting started. You've just been there just over a year. Well done on all the cost cutting, because you know what? Management is what sometimes has to take that hard view and just turn around and say, as you said, we shut down the Brisbane office. We made sure that there was no duplication. And it sounds to me like the costs are getting down, you're reducing your debt levels, but that the markets are out there and you're only just getting started. So I wish you all the best going forward. I'm sure we'll speak again, and I'll look with great interest on TZ Solutions. And ladies and gentlemen, as I said before, the ASX code is TZL. Very interesting company, now in very good hands with new management and new growth opportunities. Scott Beeton, thanks for joining us on Small Caps today.
Thanks, Carrie. Love being here. Thank you.